Hey everyone, welcome back to Corporate Decoder, the place where we decode the often confusing language of corporate filings. Today we're diving into an 8K report from Shift4 Payments, and no, it's not about shifting the blame for late payments, although after seeing this report maybe someone should be. In short, Shift4 Payments just raised a whole lot of money by selling bonds, essentially borrowing cash they plan to spend on buying another company, paying off old debts, and who knows what else. So let's unpack what this all means for the company and its investors. If you find value in these clear explanations, be sure to subscribe and join our Discord community linked in the description for more in-depth discussions. This 8K report is dated May 16th, 2025. This is the date of the event they are reporting, in this case the closing of a big financial deal. The first thing we need to look at is item 1.01, which talks about entry into a material definitive agreement. This basically means they've entered a legally binding agreement that's important enough to tell the Securities and Exchange Commission, or SEC, about it. In this case, it's about issuing a whole bunch of new bonds. So Shift4 Payments, they're the ones taking out this loan, is a payment processing company. They handle transactions for other businesses, think restaurants, hotels, and stores. A large part of what they do is move money safely and reliably from customers to businesses. Here's the main event. Shift4 Payments sold 680 million euros worth of euro notes and 550 millions. That's a lot of money. When a company issues notes like these, they are basically borrowing money and promising to pay it back with interest. This is how companies raise capital or money to fund their operations or make investments. After deducting the cost of selling these notes, Shift4 Payments pocketed around $1,081.7 million. Keep in mind that this number is smaller than the original loan because bankers and advisors got paid first. So what are they going to do with all that cash? First, a big chunk is going towards buying another company called Global Blue. This is known as a merger, and it will cost a lot of money. Shift4 is also going to use it to pay off some older debts, specifically those 4.625% senior notes due 2026. Think of it like refinancing your house. They are taking out new loans to pay off older ones and hopefully get better terms. They also mentioned other strategic acquisitions and growth initiatives, which sounds like they want to buy smaller competitors or expand into new markets. Here is a word of caution. The company acknowledges that they might not be able to secure a separate loan they are pursuing called Term Loan B on the terms they expect or at all. In other words, everything they plan to do hinges on getting all the funding they expect. They plan to pay off the 2026 notes after they close this offering, but they admit that paying off those notes isn't a condition of this current deal. What they're saying is, we intend to pay these off, but if we don't, this new debt deal is still going through. These new 2032 notes are not entirely new. They're actually additions to a previous set of notes they issued in August 2024. It's like adding more slices to the same pizza. All these notes are under the same agreement or indenture. The new and existing notes are considered the same, like they are one big happy family of debt. These notes are senior unsecured obligations. This means that if Shift4 goes bankrupt, these note holders get paid before some other lenders. Unsecured means there is no specific asset backing the loan. They are relying on Shift4's general ability to pay. The notes are guaranteed by Shift4 subsidiaries. Essentially, if Shift4 can't pay, its subsidiaries are on the hook, but this guarantee is also unsecured. Let's dive into the details of these notes. The new 2032 notes will mature or come due on August 15, 2032. That's when Shift4 has to pay back the principal or the original amount they borrowed. They will also pay interest at a rate of 6.750% per year. This is the cost of borrowing the money. The interest will be paid twice a year on February 15 and August 15, and it's paid in arrears, which means after the period it covers. So you pay in August for the previous 6 months. Shift4 has the option to redeem these notes early, meaning they can pay them off before the maturity date. There are specific rules for doing so. Before August 15, 2027, they have to pay a premium to redeem them, known as a make-whole premium. After that date, they can redeem at a price specified in the agreement. They also have the option to redeem up to 40% of the notes with the proceeds from selling stock before August 15, 2027. If there's a change of control, meaning Shift4 gets bought out or undergoes a major ownership change, they have to offer to buy back the notes at 101% of the principal amount. This protects the note holders if the company's ownership changes. If Shift4 sells off assets, like parts of a company, they have to use the money to buy back the notes, unless they reinvest that money back into the business or reduce debt. Now let's switch gears to the Euro notes. These are very similar, but they are issued in euros and have slightly different terms. These euro notes will mature on May 15, 2033 and pay interest at a rate of 5% per year. There's a special condition for the euro notes. If the global blue merger doesn't happen by September 30, 2025, Shift4 has to redeem the euro notes at 101% of their value. This is a way to protect investors if the merger falls through. The indentures contain covenants, which are promises that Shift4 makes to the note holders. These covenants limit what Shift4 can do, like taking on more debt, paying dividends, selling assets, and making deals with affiliates. These restrictions are meant to protect the note holders by ensuring Shift4 doesn't take actions that would make it harder to repay the debt. If Shift4 gets a good credit rating from agencies like Fitch or Moody's, some of these restrictions will be relaxed. These notes were sold to sophisticated investors under specific exemptions from the Securities Act, meaning they weren't offered to the general public. This confirms that these notes represent a direct financial obligation for Shift4. They are legally bound to repay the debt. Finally, there is a press release that Shift4 issued on May 16, 2025, announcing the completion of the notes offering. Now let's step back and consider what this all means. Shift4 is taking on a lot of debt to finance a major acquisition and refinance existing debt. This is a bold move that could pay off handsomely if the global blue merger is successful and the combined company generates strong growth. However, it also increases their financial risk. If the merger doesn't go as planned or if the economy slows down, Shift4 could find itself struggling to repay its debts. One notable risk is the dependency on the global blue merger. If that deal falls apart, they are on the hook to redeem the euro notes, which would be a significant financial burden. On the other hand, there's a potential opportunity if they can successfully integrate global blue and leverage their combined strengths to gain market share. In conclusion, Shift4 Payments is making a big bet on its future. This could be a game changer, but it's not without its risks. What's your take on Shift4's debt-fueled strategy? Let me know in the comments below. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. And don't forget to join our Discord community for more in-depth discussions. The link is in the description. Thanks for watching, and I'll see you in the next video.